Good evening, everybody. Welcome to this webinar brought to you by WealthFort in collaboration with RHB Investment Bank. Today, our webinar topic is capitalizing on US election volatility with warrants. So welcome everybody to this session. Today, I am the speaker for this session. I'm invited to share my view on the US election as well as the US market outlook. So this session will consist of two speakers, whereby I will begin for the first 45 minutes. Then after that, I will hand over to our special guest from RHB to talk about how do you use warrants to capitalize on the US election volatility. And then after that, we'll proceed to Q&A sessions. So are you ready? If you're ready, maybe you can type 1 in the chat box and let me know. Okay, type 1 in the chat box if you are already ready for the session. Right. Thank you so much. All right. Well, thanks for all the 1. Okay. Now, allow me to briefly introduce myself. My name is Choo. I'm Director of WealthFort and Life Champ. I've done trainings for over 10 years. I've also invested in the market since 2009. So 15 years of experience in the market. And I've seen, let me think, as an investor, I've seen 3 to 4 US election to 2012, 16, 23, 3 US elections. So today I'm sharing with you my experience in watching and observing these elections and how it would lead to the market volatility. All right. So that's my background. So today, what we're going to cover is we're going to talk about the US economy and market review first before we talk about the US presidential election. So we'll go through some of the economic indicators in the US before we delve into the elections related topic. All right. So disclaimer is whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you're solely responsible for all investment risk. Now, let's begin our webinar by taking a glimpse at the US economic indicator. So for the GDP growth rate, in the second quarter of 2024, the US GDP grew at an annualized 3%, okay, which is much better, close to double of their performance in Q1, right? So this is a good sign. So it should allay all the recession fears, yeah? For the manufacturing, so how does it perform? So if you take a look at the US manufacturing PMI, in September, the S&P global manufacturing PMI was revised higher to 47.3 from a preliminary of 47. But it still remained the lowest since June 2023. So if you notice, since June 2023, they were in an expansionary phase. For PMI, anything above the 50 reading or the threshold is considered expansion. Anything below the 50 threshold is considered contraction. So since July this year, in Q3, right, it's particularly bad for the US manufacturing. So they were going through a kind of contraction period. So employment dropped at the fastest pace since 2010. However, business confidence improved slightly with optimism around post-election demand recovery. So input cost inflation softened but remained high, and firms raised prices at the fastest pace since April. So for the services PMI, so in America, manufacturing is not as important if compared to services, because in America, they are mainly a service-oriented economy. So services PMI plays a more important role in comparison to the manufacturing PMI. So over the past quarter, you have seen that PMI actually went above 50 marks, right? Since June, the services PMI was in contraction. Then since July, right, it has gone up to expansionary phase, right? So in September, they saw to about 54.9, which is a good sign. Okay, it is the highest since October last year. So for inflation rate, which is a closely watched indicator, it has come down to 2.4%. Okay, slow for 6 consecutive months to 2.4% in September. This is the lowest since February 2021. So the annual core inflation rate unexpectedly edged up to 3.3% compared to 3.2% in the previous 2 months, while investors were expected it to stay at 3.2%. Okay, so inflation looks like it has been tamed. So the monthly core inflation rate remained at 0.3%. Now let's take a look at the US unemployment rate. US unemployment rate fell to 4.1% in September 2024. This is the lowest in 3 months. So in the latest 3 months, it actually fell a fair bit, down from 4.2% in the previous month, and that surprised the market. So generally, you see that for the past 2 years or so, the unemployment rate still maintained at the low level between 3% to about 4.5% range. So given that employment looks like at the maximum level, close to maximum level, so Fed has actually delivered one of the dual mandates. So for the US retail sales, it increased 0.4% month on month in September, well above the 0.1% gain in August. Okay, so this is if you take a look at the zero, okay, in the Q3, right, they were actually above 0%. So actually there's growth, right? So US retail sales, there's growth. That means consumer spending is still strong, okay? So sales at miscellaneous store retailers recorded the biggest increase, 4%, followed by clothing, 1.5%, health and personal care stores, 1.1%, and F&B stores, 1%. So consumer spendings at retail outlets are still strong. For US consumer confidence, however, fell to 98.7 from an outwardly revised 105.6 in August. So in the latest month, it has fallen a fair bit. So for the 10-year bond yield, it actually held around 4.1%. That was about last week level. Okay, not today, it's last week because I did a slide last week. So hovering at its highest level since late July on bets that the Fed will not deliver further supersized rate cuts at its remaining meetings this year. So those views developed as the latest monthly jobs report and consumer inflation data came in stronger than expected. Now, although higher weekly jobless claim and slowing producer inflation provided a counter argument. So markets are currently assigning a 87% probability for a more modest 25 basis point cut in November, while pricing out any chance of another 50 basis point cut in November. So because of this, so the bond yield actually rally. Okay, because they don't think that Fed is going to deliver any further supersized cut, so the bond yield rally in response. Okay, that means bond price came down. Okay, so so the market is expecting another 25 basis point cut in November and also another 25 basis point cut in December. That's more likely the case. So the Federal Reserve started the rate cut cycle with a strong mode, whereby they cut 50 basis point in the first cut. Subsequently, the rest of the year, market expected it to cut about 25 basis point for each month. So for the 10-year US bond yield, if we take a look at a longer period, just now we take a look at a very short period. At a long-term period, we notice that it has actually broken the downward trend. Okay, it has broken the downward trend. Will the cut interest rate cause it to come back down? Actually, I think yes. So will it break this downward trend? This remains to be seen. So the bond yield could actually tumble to this downtrend line, and maybe there's a it's likely to rebound after touching the downtrend line. Okay. So for the US Central Bank balance sheet, it has actually decreased to about 7 trillion on the 9th October. So the Fed has been doing quantitative tightening since late of 2022. You see, since late of 2022, the Fed balance sheet has actually come down. Okay, so they are pulling back more and more liquidity from the market. So these are the 2 remaining FOMC meetings in November and December. So we will see whether there will be another 50 basis point cut. So the market is thinking there won't be any likelihood for 50 basis point cut. So what are the key takeaways from the September FOMC? The Federal Reserve lowered interest rate by 50 basis points to a target range of 4.75% to 5%, easing monetary policy for the first time in 4 years due to the progress on the Fed's dual mandate, which is to control inflation and to ensure and encourage maximum employment. So far, Fed has done a decent job in managing the inflation as well as to ensure that maximum employment. So because of that, they cut the interest rate. So Jerome Powell emphasized that inflation is much closer to its 2% target and the labor market is less tight than pre-pandemic in 2019. So the central bank forecast that the interest rate will reach 3.4% by 2025. And by 2026, rates are expected to fall to 2.9% with an additional half-point reduction. So that is the forecast by the central bank. So if we take a look at the Fed fund rate versus the US stock market, right? So some people are concerned, right? Will the interest rate cut cause the market to tank? Because over the past few examples, we tend to notice that every time the interest rate cut, the market plunge, right? So if you take a look at the recent two cuts, right? In 2008, right? The reason the Fed cut the interest rate because the subprime mortgage crisis had caused the bubble to collapse. So that's why they had to cut very drastically. So the market came down. All right. So in 2019, when they cut the interest rate, right? If you take a look at this, the market actually still rallying. Okay, the market still rallying. All right. But this crash is actually caused by COVID-19. Okay, so it has nothing to do with the interest rate cut here. All right. So this time we have started the rate cut cycle. Okay, so we'll see. Will it come down? Will it go to the bear market? So we shall see. All right. So I tend to think that not every rate cut will cause a market financial crisis, right? So it's not 100% guaranteed that every rate cut will cause the market to tank. So for US dollar index, US dollar should have peaked in late 2022. So since the late 2022, the US dollar index actually come down, okay, because the market has anticipated that the inflation should be more or less contained. So the US dollar have actually come down. But how come we don't feel that the US dollar come down in the past 2 years? As because Malaysian ringgit actually weakened more than the US dollar. Okay, our Malaysian ringgit only strengthened beginning mid of this year. Okay, so we only see that our Malaysian ringgit outperformed the other currency, right? But actually, US dollar has actually already weakened since the late of 2022. So every time when US dollar is weakened, emerging markets tend to do better, right? So this is a correlation between US dollar index versus MSCI Asia ex Japan index. So if you notice, every time when the US dollars index comes down, the MSCI Asia index goes up. All right. So a strong dollars is not good for emerging markets, whereby a weak dollar will be good for emerging market. So this time, I think everybody feels that, ringgit is back. Okay. So this is the effect of US dollar weakening. So year to date, Dow Jones Industrial Average performance is actually up 13.4%. So the blue chip in the US are doing very well this year. So if you have a US blue chip, your portfolio should be doing fairly well. S&P 500 performance is up 21.9%. It's even better than Dow Jones. Okay, so the broader US economy is actually performing well. Nasdaq is up 22.01%. Okay, while the Russell 2000 is up 10.99%. So these are the performance for the big cap, small cap, and the broad economy and the Nasdaq. Okay, so usually in this year, right, Russell underperformed the other index, okay, which is usually the case because in US the blue chip usually outperform the small cap. So for the sector performance, right, year-to-date return, financial services is up 13%, energy is up 8.5%, utility is up 7.9%, real estate is up 6.83%, industrial up 5%, basic material up 2.65%, whereby communication services, consumer defensive, technology, consumer cyclical, and the healthcare are down. Okay, so if you compare these sectors' performance versus the S&P 500, you notice that S&P 500 outperform the other sectors, right? In other words, it means that the 500 largest company listed company in America actually outperform the broader the broader economy. Okay, so that means the small cap are actually dragging the performance of the 500 largest company. So in America, I typically only look at the S&P 500 constituent stocks. I don't look at the small cap. Okay. So is this rally sustainable? So if you take a look at the past S&P 500 EPS, right? You see in the recent years, the EPS has actually grown. Okay. So the rally in the stock market is actually supported by the earnings growth. Now, however, if you take a look at the P/E ratio, as of the moment, the Scholler P/E ratio stands at 37 times, okay, which is, fairly high, right? This is the third highest in the recent 100 years, 100 odd years, right? So the highest of the Scholler ratio happened in the year 2000. That is around the dot-com bubble crisis. Second time is post-pandemic period. Okay, now it's very close to reaching the second all-time high. Okay, 37.38. In other words, American market is fairly expensive at the moment. Okay, whereby the historical mean is about 17.7 times. Okay, the mean is at 17.7 times. We are more than double the mean at the moment. All right, that's for the S&P 500 PE ratio. So I've talked about the broad market by looking at the US economic indicator as well as the market performance. So now let's take a look into the US election. All right, I'm sure many of you would be very keep yourself up to date about what is happening in America, right? Whereby we'll see a clash between Democrats, Kamala Harris, and the Republican Donald Trump. Okay, so who do you think will win, right? Okay, let's launch a poll. Okay, let me do a survey first. Okay, before I share with you what is the election poll and stuff like that. Okay, let me launch a poll. Okay, so who do you think will win in this US presidential election 2024? So this is an opinion poll for our Malaysian guests, okay, who are non-voters. Okay, so these are the poll organized by the New York Times or MBS News, ABC News, Fox News. Okay, this is organized by WealthFort. Okay, let's see whom do you think will win in this US presidential election? Okay, I'll keep the poll running first before I end the poll, right? So give you more time to vote. Now, initially, Joe Biden, who is the current sitting president of the United States, was the presumptive nominee from the Democrat parties. But in late July, due to his bad performance in the debate, in the second debate, right? So, due to his bad performance in the debate, so he cannot handle the pressures from the Democrat Party. Okay, a lot of people has lost confidence in him because he either mumble or lost his chain of thoughts, okay, in the debate, right? So a lot of Democrats felt, that he is not suitable to represent the party in this election. So they, out of the pressure from the Democrat Party, so he decided to pull out. Okay, in late July, he announced that he will drop out from the presidential election race, and he endorsed Kamala Harris, who is his sitting vice president, to be the nominee for the Democrat Party. And of course, during the Democrat convention, the Democrat decided to nominate, okay, Kamala Harris as the candidate for the Democratic Party. Okay, so now we have seen that one who is fighting to be the first lady president, and the one who is seeking the second term, okay, non-consecutive term, to be in the office. All right. So this is what is happening right now. All right, so let me end the poll and show you the result. Okay, we have about 70% of you who participated in the poll. Okay. Okay. Can you see the result? Okay, of the poll. Okay. Half of you, literally exactly half of you, think that Donald Trump will win. And exactly half of you think that Kamala Harris will win, right? So even in the local landscape, the odds is also 50-50. So the race is very tight, right? As all of you can see, the race is very tight, isn't it? So in America, the race is, uh, equally tight. Okay, so let me show you some of the opinion poll. Okay, so these are the election polls organized by the media. So from Financial Times, right, Kamala Harris is actually has about 49.3% or point. Donald Trump is coming up, right? So initially, Donald Trump was leading between Trump and Biden. Then after that, when Biden decided to step down, then Kamala Harris, okay, popularity soared. Okay, before that, Kamala Harris wasn't really liked by the Americans, but after that, after she received the endorsement from Joe Biden, from Barack Obama, Michelle Obama, okay, then her popularity soared, and now she seems to be leading in the opinion poll. That's compiled by Financial Times, but NBC News, they are tied at 48%. All right. So how about the other poll done by New York Times? Kamala Harris led by 49%, Trump is 48%. If you notice, in recent period, Trump is actually closing the gap between him and Kamala Harris. In the other poll, it also show the same trend. All right. So this is the poll organized by ABC News. Trump is actually closing the gap as well. He is also trailing in this poll, whereby Kamala Harris led by only 1.8% difference. So from all the opinion polls that I have gathered, I think that Kamala Harris is likely to gain the popular vote, to win in the popular vote. In other words, there is higher likelihood that Kamala Harris will have more votes from the American voters. Okay, but will she win? I'm not so sure, because in 2016, right? I remember that Hillary Clinton also win the popular vote. However, Donald Trump won the presidential election. Okay, because in America, the whoever got win in the presidential race is not counted by who got the most votes. It is counted by electoral college format. So whoever who secured the most electoral votes will be in the office. So it's a winner take all in that state, right? So the winner takes all in that state. So if the state carry 10 electoral votes, then they will take all if they won the state. Right, so this is the different format as opposed to our Westminster parliamentary format. So this is the election poll, opinion poll run by the media. So it shows that Kamala Harris is more likely to win in the presidential election. Okay, but let us take a look at the real money. Where is it bet on? So if we go to the betting market, right? Betting market, Kaoshi is a betting market where you can bet, right? You can place your bet, right? Whether you pick Kamala Harris or you pick Donald Trump, right? Or you pick Robert J. F. Kennedy, all right? Who will win? Okay, so it's a betting market. So that's where real money is at. 57% of them bet that Donald Trump will win. 43% of them bet that Kamala Harris will win. So this is a betting market by Kaoshi. All right. So if you take a look at polymer, okay, Polymarket, okay, not polymer, Polymarket. So the betting market shows that 61% of them bet that Trump will win. 39% of them bet that Kamala Harris will win, right? So even in the swing states, okay, in the swing states such as Arizona, Georgia, Pennsylvania, Nevada, Michigan, Wisconsin, but the bet on the swing state shows that Donald Trump will win all the swing states here. Okay. So more than $2 billion have been bet on election outcome. Okay. So the betting market have already raised more than $2 billion US dollar. Okay. Whether they bet on congressional outcome or they bet on US Senate election outcome or they bet on the presidential election outcome. So there have been more than 2 billion. So this is where the real money is bet. In my opinion, the real money tends to be a more accurate indicator of the election outcome. That's my opinion. All right. So I think the key essentials of this election is who win the swing states, because for other states it's more or less a solid Democrat or solid Republican, because it's only the swing states that are likely to determine the election outcome. So in this poll, right, apparently Donald Trump, a lot more people are betting Donald Trump will win all this in swing state. So Pennsylvania, for example, is very important because not only are they the swing state, they're also a bellwether state. Okay, Nevada is also a bellwether state. Ohio is also a bellwether state. Florida is also a key battleground. So these are the few important battleground that the candidate should focus on. Right. So the betting market by polymer, there are 66% of them think that Kamala Harris will win. 34% think that Donald Trump will win. Popular vote. Okay. So in other words, this is very consistent with the opinion poll, because opinion poll tends to favor Kamala Harris. But Donald Trump, 34% think that he will win the popular vote. Okay. So in other words, the betting market think that Kamala Harris will win the popular vote but lost the race, the presidential election. For the House, okay, who will control the House? So the betting market shows that 51% of them think that Democrat will control the House. But for the Senate, right, 19% think that Democrat will control the House. In other words, 81% of them think that the Republican will control the Senate. Okay, 19% think that it will go to Democrat. 81% think that it will be a Republican. So in other words, Republican, is more likely, okay, to control the Senate, whereby Democrat is more likely to control the House. So if it is in this situation, then the bill will not pass so speedily, okay, because there will be a lot of blockage here and there, right? So if both upper house and lower house are controlled by Republican with a Republican president, then things will go pretty fast. All right. So these are all the election outcome, right? So for us, is it important? I think that my view is that whoever become the president is not as important, because we have seen both candidates, right? I mean, if Kamala Harris wins, status quo shall remain. Okay, in other words, Biden's policy can be continue, and Kamala Harris will roll out her own policy as well. So it's more like a Democrat's policy, right? So if Donald Trump wins, it tends to create more surprises, because Donald Trump is a bit more unpredictable compared to Kamala Harris, right? So it tends to create a bit more surprises and a bit more volatility. But we have survived through the Donald Trump first term from 2016 to 2020, right? So we have survived that, and we more or less can guess, okay, what is he's going to do, right? Tariff, this and that, right? So to me, this election outcome is just like for Malaysian, because we are not voters there, right? For Malaysian, it's just like entertainment, okay? Just watch it for entertainment purpose, okay? So now let's talk about, what are the opportunities if Trump wins, right? So Trump is known for all his America First policy, okay? He's anti globalization. So he is more nationalist, right? He wants to protect American industries. So his policy will focus on economic protectionism. Okay, get back all the jobs, okay, back from America. Okay, manufacturing jobs, please come back. Okay, so if more jobs goes back to America, then manufacturing costs, will be higher, because America, the cost of labor is very high, right? Strict immigration control. Okay, got to build a wall. Okay, strict immigration and border control. Tax cuts, right? Okay, outrageous tax cuts, especially for his, for the wealthy, right? So for the wealthy, right? Outrageous tax cuts, which spur the market. Okay, good, because we love tax cuts, right? Deregulations, so that means banks will tend to benefit. It wants to break down all the bureaucracy. Lukewarm attitude towards clean energy. So the fossil fuel guys will be very happy if Trump wins election. He also vows to restore peace in Europe and in Middle East, because I think during his term there's no war, right? He likes to brag that during my term there was no war. Okay, during Biden term, okay, there were Ukraine war, Middle East war, a lot of wars happened. So during his term, he even brokered peace in North Korea and South Korea, right? So that's what he is known for, huh? So what kind of companies will benefit, right? So this is not compiled by me, it's compiled by Mumu, okay? Because I'm not a licensed analyst, I cannot give stock pick, right? So I will just talk about what Mumu think, okay? This is my broker, Mumu. Okay? So for companies that are related to Trump, right, like DJT, right, who owns the Trump social media, would likely to benefit. Panware or Rumble, which are also his companies. So these are Trump-linked companies, will be the primary beneficiary if Trump wins. Okay, then due to these financial deregulations, so all the banks will benefit, right? So if you think Trump will win, then maybe you can start to accumulate, okay, positions in banks. Conventional energy, which involve in fossil fuel, right? These are companies like ExxonMobil, Chevron, okay, so the benefit. Support for Medicare Advantage, right? United Health, Humana, okay. Tariffs, okay, tariffs. So this will companies that will benefit if tariffs are imposed against the other countries such as China, right? So Intel, Texas, Instrument, Applied Materials, GM, and so on. So agricultural support, these two companies will benefit. Tesla may benefit because Elon Musk publicly endorses Tesla and also donated to his campaign. Crypto mining, okay. Donald Trump is seen as a the biggest crypto proponent, right? So he will definitely support crypto. So crypto mining companies, these companies related could benefit for less drug price pressure, because the big pharma love Donald Trump. So if Donald Trump wins, then these companies could benefit. Okay? Eli Lilly, Merck, and so on. So these are the big pharmas because they could have less cost pressure from the government. So these are companies that will benefit if Trump wins. So if you ask me which are the Malaysian companies that could benefit, right? So let's think about, during 2016 to 2020, right? What are the sectors that benefit, right? So if I remember vividly, technology sectors actually rally because during that period, during all this tariff, right, a lot of investors will think that all this disruption will cause the jobs flow back to Southeast Asia. In particular, semiconductor job could come to Malaysia. So most of the semiconductor stock were performing well during Trump administration period. So this is tariff part. So like the glove, right? So recently, now we also have glove tariffs on the Chinese producers, right? So if tariff imposed, then glove counters, could benefit. Okay, so this is a possible outcome, right? So tariff related, typically, a lot of companies are embracing China plus one strategy. So if there's any tariff on China, right, then they should have other factories elsewhere, right, to take on the flow job from China to their country. So not only that, a lot of companies are also adopting Taiwan plus one, right? If they already have a facility in Taiwan, they want to have one more facility elsewhere, so that if in any scenario, unlikely scenario that Taiwan got into a war with China, let's say, then the business disruption will be huge, right? So they want to protect themselves and have a facility elsewhere. So these are companies that tend to benefit. Okay, fossil fuels. Okay, for fossil fuel will benefit, right? If fossil fuel is encouraged in America, okay, then they will increase demand for oil and gas. Then Petronas will be happy, right? Oil and gas price goes up, dividend to the government, federal government will be huge, will be better, right? So fossil fuel, good, also good for Malaysia. All right, so let's talk about Harris, okay, Kamala Harris. What are the opportunity if Kamala Harris win, right? So Kamala Harris, is the Democrats' policy. So Kamala Harris wants to cut taxes for the middle class. So she wants to, she says that a stronger middle class makes a stronger America. So cut taxes for the middle class, but she's going to roll back all the tax cuts by Donald Trump, whereby she's going to raise taxes for the rich. So for instance, if you do share buyback, you need to pay tax. Okay. If you do if you're going to raise the tax rate so that the wealthy, so for instance, a billionaire tax, right? So the wealthy has to pay a fairer share compared to the working class or the middle class, right? So in at the current stage, right, it looks like the wealthy people have a lot of tax loopholes, so they hire a lot of very experienced tax consultant, attorneys to help them to evade, to avoid all the taxes through all this kind of setup of companies in a tax haven countries, right? So I think she's going to impose more taxes or impose a billionaire tax, share buyback tax, and so on, so that if she will feel that, so that American pay a fairer share of taxes, regardless whether you're working class, middle class, or the wealthy. She's going to make rents and home ownership more affordable. So so in America, rents are very expensive. Home ownership is even more expensive, and she wants to make them more affordable by building, more affordable homes, encouraging more affordable homes. She's going to lower the health insurance and drug prices, so more people can afford health insurance. More people can afford to buy the essential drugs. Okay, such as she wants to impose such as the insulin cap, right? And she wants to raise the minimum wage. Okay, just like what Anwar Ibrahim has just done, right? Okay, raise minimum wage from 1,500 to 2,700 ringgit. Okay, yeah, in just stable in budget 2025. Okay, so she wants to raise the minimum wage as well, and she is a big proponent of clean energy. Okay, as opposed to Donald Trump, who take America out of the Paris Accord. Now she's the one who wants to champion clean energy. So this is a summary of what she aims to do. All right. So what are the stocks that could benefit from Harris policy? Right. So this is also companies compiled by Mumu. So I'm not a licensed advisor, so I can't give investment advice. So I just rely on the data given by licensed broker. Okay. So Mumu think that clean energy would benefit companies such as First Solar, okay, Enphase Energy, Next Tracker. Okay, crypto. Crypto is interesting because both candidates also want to coax the people from the crypto space to vote for them. Okay, so both parties are friendly to crypto. Okay, but in my opinion, Trump has a bigger presence in the crypto space. So in other words, if you invest, if you have a position in crypto, then regardless of which side win, right? So crypto should also rally. Okay, so this is what Mumu think. Okay, electric vehicles, okay, EV, okay, Ford, General Motors, Rivian Automotive could benefit because clean energy, right? She champions clean energy. Consumer, okay, because it lowers the cost of living and stuff like that. So consumer staples could benefit, such as Walmart, Costco, or Amazon. Amazon would be a good a direct beneficiary. Real estate, okay, because she wants to make homes more affordable, rents more affordable, so companies involved in real estate could also benefit. And cannabis, right? Companies involved in cannabis could also benefit because Kamala Harris wants to legalize marijuana, so she wants to legalize the use of cannabis in treatment. So companies involved in cannabis could benefit from it. Okay, so think along this line, right? So if Kamala Harris wins the race, then status quo shall remain. The Democrats shall remain, right? So companies involved in EV could have a big boost. Company involved in clean energy. In Malaysia, I think there are companies who supply the First Solar as well. So if First Solar, if First Solar is doing well, then our local contractors who supply, the First Solar could also, do well. All right. So this is potential opportunities if Kamala Harris wins. Now, to me, right, which side wins, I think America will still go up. Okay. So this is the US stock market performance across different presidencies, whether it is the blue or whether it's a red, regardless of who wins, America still rally. Okay, so of course there are some pullback or correction along the way. It's a healthy correction. It's very normal. So the market does not go in straight line. It goes in ups and down in wave pattern, right? So you see over the years, okay, for the 100 years, past 100 years, it always rally in the long run. All right. So regardless of who become the president, whether there's a tax cut or whether there's no tax cut, okay, market still rallies. Okay. In fact, if you take a look at the stock performance, okay, during the election year versus the non-election year, you will notice this is the US presidential elections, okay, with no election, okay, years with no election, the subsequent return is only 5.8%. The one with presidential elections, the subsequent 1 year return is 10.2%. Okay, so in other words, years with election, right, market tend to be more volatile. Okay, years with election, but after the election, right, the candidates are more or less formed, right? So in May or June, this is when the Democrat do their convention, close to finalizing who are the candidates already. Market tend to rally. Okay, market rally since mid-May until next year May. Right? For the next 1 year, market rally 10.2%. So this is the average return since 1932. Okay, since 1932, so close to 100 years data. So the ones with no election, right? During the primaries time, it goes up. Then after that, it only perform 5.8%. Okay, in the next 1 year. So in other words, right, the year with election, the market actually outperformed the year without the election on the average. So in other words, presidential election years should be a bullish year. All right. In the next, extend to next May, extend to next May, it should still be bullish year. On average, it performed better. So if you take a look at the S&P 500 seasonality pattern, right? Seasonality pattern. So in 2012, okay, which is when Obama was elected for his second term. So if you take a look at October, right, it was actually a down month. Okay, November is a green month. December is a green month. Okay, so let's take a look at 2016, right? Seasonality pattern. In October, when Donald Trump, this is the year when Donald Trump was elected. So before Donald Trump was elected, the market is down 1.94%. But after Donald Trump was elected, the market actually rallied, right? 3.4%. So they are not worried, right? In fact, they cheer because Donald Trump promises tax cuts, right? So market rally. Okay. In December, market also rally. In 2020, before Joe Biden was elected, the market is down. Even worse, right? Than in comparison 2016 to 2012, right? The market down 2.77%. But post-election, when Donald Trump was defeated for his re-election, Donald Trump was defeated, the market actually rallied even more, right? 10.75%. Okay, the market cheer for Joe Biden. And in December, it also went up, right? So what are the patterns we see here? The pattern we see here for the past 3 elections is that October tend to be a bearish month, whereby November and December are all the bullish month. So in other words, right, if historical performance were an indicator to the future, then October, any dip in the next 10 days, okay, in the next 8 days, in the next 8 days, would be a good opportunity for you to accumulate because you could buy low, right? Because November and December tend to be a bullish month. You get what I mean? But so far this year, October is still a good month. Okay, so far this year, October is still in the green lah, not yet in the red lah. Okay, so this year is a little bit different. Okay, October is not in the red yet. So if October is about to become red, right, that means the next 8 days the market is going to correct quite a fair bit, because this month has been pretty good so far. All right, so November and December tends to be a better month after the election. So you see, regardless who win, November and December tend to be a bullish month. All right. So we shall see whether this pattern repeat itself this year or not. So if the next 8 days become bearish, I'm not surprised because in the past 3 election years, right, October tend to be a bearish month. All right. So this is what happened in the past 3 elections. So what are the underlying risks? Geopolitical tensions. Of course, now we have increased tension in Middle East, right? Middle East, Iran has fired missiles, right? This time is hypersonic missiles that are less intercepted by Israel allies, okay, and hit at Israel. I think Israel is waiting to strike back, so probably waiting for the better time after the US election, okay, I don't know, all right? So geopolitical tension is on the rise. It happens in the Middle East especially, all right? Aggressive quantitative tightening, okay, so we should watch out for. So far, it does not create a much impact yet. High inflation, if inflation persists, okay, now looks like inflation is tamed. US recession fear, okay, and also the weaker corporate earnings. Okay, weaker corporate earnings will lead to weaker stock market performance. So if you take a look at the current US Treasury yield curve, we notice that the yield curve is still inverted, right? So this is the August yield curve, right? You see the 3-month Treasury yield is still higher than the long-term dated US Treasury yield. This is 30-year US Treasury yield. However, if you take a look between 2-year and 10-year, right? If you take a look at 2-year and 10-year, 10-year yield is actually higher than 2-year yield already. Okay, 30-year bond yield is actually higher than 2-year bond yield already. Right? Although compared to 3-month, they still remain inverted. So in other words, the 2-year and 10-year spread has now back to normal. The 2-year versus 30-year yield spread has also gone back to normal. So if you take a look at 10-year versus 3-month yield spread, it is still negative. As I've shown you, it is still negative. That means it is still inverted yield curve between 10-year versus 3-month. This is the most commonly watched indicator to see if there's any recession in the next 12 months or not. Okay, this is the most commonly watched. If we take a look at the US Fed, New York Fed model, the odds of recession in the next 12 months is actually 56%. Okay, I think on August 5th, right, there were some recession fears, right, in the US, whereby the economic indicator, were not performing well in that month. And also it also exacerbated due to the Japanese carry trade. So August 5th, right, become a new Black Monday. Okay, I'm sure everybody still remember, right? August 5th become a new Black Monday. So everybody was worried about recession, right? So for odds of recession in the next 12 months, it's at 56%. But it has been here and there for the past year or so, but just that recession still hasn't happened. Okay, for the US recession probability, this is done by another firm. It stands about 57% odds. So if you take a look at yield spread, right, 10-year versus 3 months, right? If you take a look between 10-year versus 3 months, every time when the yield curve inversion happen, it is followed by a recession period here. Okay, the shaded area is a recession. So every time when there's 10-year versus 3-month yield spread is actually in inverted zone, there's a recession, after that, right? So the next time it happened in 2001 or so. So yield curve inversion happened, then it's followed suit by a recession, and this is the same, okay, followed by a recession. But if you take a closer look, right, it is not that when it become inverted, there's a recession. It happens after the yield curve has uninverted. Okay, so when the yield curve has uninverted, then the recession happens shortly after that. So when the yield curve go back to normal, then the recession happen after that. So when the yield curve go back to normal, recession happen after that. So for the past 3 times that I show you here, it happens. Okay, so this time is the 4th time, right? When yield curve uninvert, then a shallow recession happened here during the COVID-19 pandemic. So as of 10-year versus 3 month, we still not yet uninvert. If we not yet uninvert, it means that recession may not happen so soon. If this data prove to be correct, okay, is this data is an indicator for any future recession. All right. But if you take a look between 10-year versus 2-year, okay, versus 2-year, okay, we have actually uninverted. Okay, 10-year versus 2-year have uninverted, even though 10-year versus 3 months has not. All right. So there was a time where 10-year versus 2-year uninvert concurrently with the recession. Okay, so this one also concurrently with the recession. This one is ahead of the recession. This one uninvert ahead of recession. Uninvert ahead of recession. This one actually never got into inversion yet, huh? So now this one has already uninvert. All right, just to bring to attention. All right, so I think it's just a matter of time that 10-year versus 3 months will uninvert in the next 12 months. That's in my opinion. All right, so I've come to the end of my sharing. I've talked about the US economy in general. I've talked about the elections, what are the more likely outcome, what would be the opportunity if either candidate wins. I also explore the possible risks of recessions and what the risks we should watch out for in the market. So I would like to invite the second guest, who is Miss Vanessa Tong, who is a warrant specialist from RHB Investment Bank, to share with you how do you capitalize on the US election volatility with structured warrants. Now, RHB is the only issuer with a single stock warrants listed on Malaysia. So let's welcome Miss Vanessa Tong. Vanessa, over to you.
Thank you, Shane. Hi, everyone. Thank you so much for dialing in today. So I think it's really interesting on what shared by Shane, and I think this is actually a very important event that everyone is eyeing on. All right, so let me just share my screen. Okay, so today I'll be sharing more about warrants, because as we know that warrant is actually one of the very powerful instruments for us to, magnify our return. Okay, so before I start, right, just want to let you know that this would be okay. So this would be just educational sharing, and there's no buy and sell calls or over this presentation. Okay, so as I think every of you also like did the same thing as me, we go to Google and research. Okay, before Shane explains and he actually share on his views, we will definitely go to Google and we will see, okay, who is going to be benefiting under Trump's victory, or maybe Harry's victory. All right, so before we start going into that, so let me just show you what is actually warrants. All right, so for a structured warrant is really powerful because it's actually an instrument that magnify your returns. All right, so for an example, I will just use local stock as an example, because I mean structured warrants, they are generally the same. All right, so 99 speed mark is actually one of the very popular stocks, I would say, in the past month. So for RHB warrant, we have issued 99 Smart CM, which is a structured warrant over 99 speed mark. 99 speed mark. All right. So from the day of the issuance, 23rd September, up to the record high on 9 October, the share actually gained 25%. All right. And while for this warrant, 99 Smart CM actually gained 133%. All right. So this is how we actually look into what is the powerful effect of a structured warrant. Okay, so it's quite straightforward lah. So for call warrants, it actually move in the same direction, and for a put warrant, it moves in the opposite direction. So I'll go into that later on. Okay, so what are the structured warrants? So structured warrants, we all know that it's actually one of the investment instrument listed on Bursa Malaysia. All right, there will be different underlyings. So underlying assets such as single stock. So Nadia Spima is one of it. And on this list, Amazon, Intel, Microsoft are actually the US stocks that we have warrants over it. All right, so besides from that, other examples such as a basket of stocks, ETFs, and indices. So indices is also one of very popular options for the investors, our local investors. So in this list, you can actually see HSI. So these are actually the warrants over Hang Seng Index. All right, so there's actually warrants over Nasdaq and some other indices as well. All right, so this is actually a snapshot from RHB TradeSmart. So this is the trading platform that I've been using. So it's quite easy for you to search on what do you want to see? All right, so whenever you see this dash, after that there's this C, it's a call warrant. After dash, there's this P, W, or maybe H, they are actually the put warrant. All right, so something very basic. Structured warrants is actually different from company warrants. So, for example, if we actually link back to the US stocks, there's actually no US stock warrants on Malaysia, over Bursa, on Bursa Malaysia. So for local stocks, local warrants, like example, Ecover WB, Ecover C29, they are actually different. WB is a company warrant, and C29 is actually a call warrant over Ecover, and it's a structured warrant. So, but the difference would be it's actually different by the issuer. So it's issued by financial institution for a call warrant or a structured warrant, while for company, it's company warrant, they're actually issued by company. And secondly, which is the very important one, that will be the role a presence of a market maker. So for structured warrants, the issuer is actually the market maker. So for example, 99 Speed Mark CM, we are the issuer, so we are also the market maker. What does a market maker do? We actually provide the bid and ask price, and we also provide the liquidity in the market for our investors to, invest into it. While for a company warrant, there's no market maker, that would actually cause the price of these company warrants will be determined by the market supply and demand. All right, so expiry for a structured warrant is very short. It's in between 6 to 12 months, and for a company warrant is usually 5 years and above, so it'll be longer. While last but not least, the settlement method for Ecover structured warrant is actually in cash, while the company warrants, it will be settled in shares. All right, so it will be determined by the moneyness of the warrant as well. So I will go into it later on. All right, so for this is an example, because the first thing that I would like to share is on the successful trades and also the failed trades. Right, so a successful trades, I would say Teo Seng is actually Teo Seng CA is also very popular. I mean, an egg counter. So Teo Seng, since the launch of this warrant, it actually gained 56%, while the share price also actually went up for quite a lot, 16% up. I think as of this morning, about 2.61 ringgit. All right, so the blue color line represent the share price movement, and also the yellow line represent the warrant movement. So this is how we look at a very successful example of a structured warrant. While it's always so good to look at all these successful trade, but failed trade actually happens to anyone. So when we see, oh, okay, today your Sing CA is actually gained 30%, but maybe you are not one of them. So how we actually use warrants, how do we make sure that warrants is actually making money for us? First thing, we know what is the entry and exit point. So for example, this is a Teo Seng snapshot, today afternoon. So Teo Seng, when it was 2.59 ringgit, is actually the last price. And also that day high was today's high was 2.67 ringgit. All right, so the thing that we'll use is actually this thing that we call a price matrix. So this is for us to learn how to go in and get out. So usually a failed trade is that you get in, you actually went in when the price was highest. So the price was highest 2.67 ringgit, and that time Teo Seng CA was 26 cents over here. So this is the bid price. While if you decided to hold it, or you decided to cut loss when Teo Seng actually went down to 2.59 ringgit on the mother share, that time Teo Seng CA would be actually worth 23.5. All right, so in this case, your warrant actually made a losses of about 9%. This is bid to bid, yeah. So there's actually a losses of 9%. So maybe this is the time that you will ask yourself, hey, why people are making money but I'm losing money? So this is one of the reasons why the trades failed, because you went in at the high side and then you have no patience and you have decided to just sell it. Or on the other or another possibility is that you do not actually use a price matrix to decide when to sell and when to buy. All right, so this is really important, a price matrix like this, which is actually available on the respective issuer's website. So in this case, Jiaxing CA is by RHB Warrant, so you can actually look at this on our RHB Warrant website. Okay, so on the other hand, another very popular warrant today was KPJ C14. So if you actually look at the snapshot, it's not that interesting because it was only like 6% up, for the bid price. So this bid price, we actually use the previous day closing, and then we compare to current price, and then we actually got a gain of 0.5 cent, which is about 6.3%. All right, so the effective gearing was about 5.8 times. It's actually quite okay. All right, so this is an example of KPJ. KPJ over here, the mother share, the price was at 2 ringgit and 14 cents, while C14 is over here. So there's actually other KPJ warrants as well. All right, but today KPJ C14 is actually the most active KPJ warrant. Okay, so this is how we actually look at how to trade it successfully. For a live example today lah. So bought it at open. If you are really bullish on KPJ this morning, the open price was about 2 ringgit and 13 cents. If you look at here, the open price 2.13, and that time was 8.5 cents. All right, so this is the warrant bid price, 8.5 cents, and then maybe you're able to capture. I would say the high was 2 ringgit and 18 cents. But if you know how to use a live price matrix, this is what we call a flipping point. This warrant price, right, from 9 cents to 9.5 cents. This is what we call a flipping point. You can actually set a price to sell when it was when the KPJ share was at 2 ringgit and 17 cents. You can actually already sell it at 9.5 cents and capture the profit over here, instead of wait for another tick on the KPJ share at 2 ringgit and 18 cents and sold it at 9.5 cents as well. All right, so this is really important for us to know how to use this price matrix to see where to go in and when to exit from the trade. So there's no sense. It makes no sense for you to actually sell it here. You can sell it over here, and you can actually enter not 2.13, maybe 2 ringgit and 12 cents if that's the case, like if it was yesterday. So it will actually it's actually very close to the flipping point, and you will actually make money on the next flipping point already. But this is example from bid to bid, so we are actually buying at ask price, so you might have to wait for 2 more steps for you to make money. Okay, so for RHB, we are actually we have been constantly issuing US stock warrants. So it's actually a single stock warrants. We have carried all these big names like Magnificent Seven before this. And currently we have 3 existing US stock warrants, namely Intel, Microsoft, and Amazon. All right, so these are the 3 US warrants that we have right now. And stay tuned for more US stock warrants. So for these 3 warrants, you can actually see that the warrants are actually listed on Bursa Malaysia, Intel C3. So you can actually use your local trading app on Bursa Malaysia. You can actually search for these 3 names. And also, using our RHB warrant website can actually look at the effective gearing of all these warrants. So instead of using margin, this is something that we call a built-in margin, because the effective gearing comes together. So for Intel, this warrant is providing about 5 times. Microsoft are now about 9 times of effective gearing, and Amazon is about 4.5 times of the leverage exposure that's provided to the investors. So why we say so? Because imagine buying a US stock like Intel, Microsoft, Amazon. So Microsoft is actually worth about $400 for one stock, one unit of Microsoft. $400 is equivalent to about 1,600, 1,700 ringgit. But in this case, if you are actually bullish on Microsoft, you can actually look into Microsoft C4, which is a call warrant. And the warrant bid price is actually 2.5 cents only. All right, so 2.5 cents ringgit only. So relatively you can actually invest in Microsoft with a smaller and a cheaper price. So we call it a smaller capital outlay, and also with, a leverage exposure. And the same time, you don't actually have to convert this to US dollar, I mean your money to US dollar, to invest in Microsoft shares. All right, so this warrant bid and ask price is actually provided by the issuers, the market maker like us. So we are just, provide this thing that we call the live price matrix again. So this is for Microsoft. So when you go into when you log on to our RHB Warrant website, you can search for Microsoft C4, and then these are all the details that you will see. So this is the price matrix. You can actually gauge the movement of the bid and ask price, and also it's providing you different parameters about Microsoft core warrants, Microsoft C4, like the effective gearing of 8 times, sensitivity, and time to maturity and all. So that's one thing that I really want to highlight to you all, that these 3 warrants, they are actually expiring in November 26th, on November 26th. So in November, month of November. So if you are bullish and you would like to invest in it, do exercise extra caution, because it's really close to expiry. Yeah, so for structured warrants, we will recommend a short-term trade. Intraday trade is not really possible. It's not really easy for US dollar warrants, so it's usually a few days trade, and do not hold any longer because it's really close to expiry. Okay. All right. So I think Shane already explained. I mean, he already helped me to do the marketing for me. So we are the only issuer of US stock warrant, and also we provide price matrix on Bursa Malaysia. So follow us on our RHB Warrant Telegram, RHB Investment Bank Telegram, and also you can actually subscribe to our email on RHB Warrant website, as we actually provide a write-up about some of the US warrants. So this is actually about Amazon C3, and yeah. All right, so I think we can go a bit slightly more technical, because as you are already following the news of the US presidential election, and definitely you have some names in your mind that you would like to invest. And at the same time, definitely you want to get more, a leverage exposure. So there's 2 things about structured warrants that you have to remember, because it's going to be super important for you to make the decision. So first thing is the effective gearing. Just now I've been mentioning about it. It actually means how much the warrant moves. So it's like a magnifier, it's like a levered. So for example, 4.5 times means that the warrant will potentially move 4.5% with every 1% in the share price. So example, 4 times, if share price goes up for 1%, and then your warrant might go up for about 4%. So there's like a very simple multiplication. But for sensitivity is how fast your warrant moves, like in accordance to the movement of your shares. So usually for sensitivity, we use the measuring unit of ticks. All right, so when you see 2 ticks of sensitivity, which means that your mother share has to move by 2 ticks. All right, so it moves 2 steps, and then your warrant will follow by 1 step. So bear in mind on sensitivity, I think I have to show you an example. So bear in mind on the sensitivity that the tick sizes are different. So this is an example on KPJ. So this is actually the tick. When you see the color and the flipping points, this is the ticks. So that's 2 ticks, and then it will flip for 1 time. So this is a sensitivity. So 2 ticks in the mother share, the warrant will move for 1 tick. So every 2 ticks, and then the warrant will move by 1 tick. So in terms of the tick sizes for 2 ringgit, securities is actually about 1 cent. But for warrants, because warrants are cheaper, and also 1 tick is actually half a cent. So in the terms of percentage, it's actually higher. All right, so this is what that's what we say about the sensitivity. So these 2 things is going to affect your decision on which to invest. All right, so how to choose a structured warrant? You look into the gearing. Usually we'll go for something that is slightly highly geared because we want, the multiplying effect. We look for something that is sensitive because it will move fast and responsive to the movement of mother share. And last but not least, you have to choose your underlying shares or underlying counter first before you invest into the structured warrant. All right, so the second thing that I am going to explain is something that I would like to debunk because I actually noticed that so many warrants investors that they actually quite confused about the moneyness of a warrant. All right, so we always say, oh, it's out the money, it's in the money, but what is that? What does that mean? And also, what is it how does it going to affect your decision making? All right, so it's very easy because as we know that all these structured warrants, they have this thing called the exercise price, which we have set it upon issuance. So exercise price is fixed. All right, but what is not fixed is the share price. So the difference of the share price and the exercise price is actually called the moneyness, or we call it the intrinsic value as well. That's a bit technical. All right, so with this graph, so when the exercise price is equals to the current share price, right? The share price now is actually at the money. So there's no intrinsic value and it's at the money. So if your call warrant, if the share price now is actually higher than your exercise price. So example, current 99 SML is actually 2 ringgit and 30 cents, but the exercise price was set at 2 ringgit and 20 cents. So it's actually higher, so it's in the money. That's intrinsic value. While if currently 99 bit mark, the price is 2 ringgit and 30 cents, but the exercise price is actually way higher, like 2 ringgit and 50 cents. So it's actually out the money. That's no intrinsic value, and we call it out the money. All right, so this is a very straightforward thing about a warrant. So it's the differences of the share price and the exercise price. And how is it going to affect us, right? So there's two things. All right, moneyness, if it's in the money, it will be more sensitive. You have to remember that. When it's out the money, relatively, it will be less sensitive but higher effective gearing. So this is actually an example of SP Setia shares that's issued by RHB Warrant. So on the share price of 1 ringgit and 39 cents with different exercise prices and also the same exercise ratio. So from here, we can see this is very deep in the money because the share price is higher than exercise price. Well, this one is very out the money because the share price is 1 ringgit 30 cents, 39 cents, and the exercise price is 1 ringgit and 70 cents. So it's out the money. So this is going to affect how you are going to choose your warrant. You want it to be very fast, it moves very fast, but the gearing is slightly lower, or you want it to move slower, but the gearing effect is more powerful. So this is up to you. So it's really important for you to notice the differences of the moneyness and also the warrant bid price, because as you can see in the money warrant, they are usually more expensive. I mean, in terms of absolute price is actually higher, while for out the money warrants, the absolute price will be slightly lesser, but that comes with a lot of other factors as well. All right, but this one, SP Setia C76, I would not recommend because the expiry date is really close. It's next week. Yeah, so I think this would be, if you ask me which would be the best, I would say SP Setia C86, which is that time was actually quite close to the exercise price, and it's giving you quite a good sensitivity about 2 ticks, and also effective gearing was quite decent at 3 times. All right, so which one is for you, out the money warrant or in the money warrant? So in the money, it's more sensitive to the share price movement, move faster, but the gearing effect is lower. So maybe it's giving you 2 times or 3 times only. All right, but for out the money warrants, is, as absolute price is lesser, it's smaller, it's cheaper, but it's less sensitive to the share price movement, which means the share price has to move so much for your warrant to flip for 1 point, a 1 tick. However, the effective gearing would be higher as well, because we mentioned that before, the absolute price of the warrant is actually cheaper. So one bit, one tick is actually half a cent. So translate it into percentage is actually higher percentage. All right, so which is really important for you is to use the right tools to make your decision. So this is a warrant search function on RHB Warrant website. You can search on the underlying over here, Malaysia underlying, US underlying, Hong Kong underlying, and then you can choose your preferred issuer to look at all the warrants that they issue. It's not only RHB warrant. Okay, I'll show you later on with our RHB warrant website. Maybe I can just show you later lah. Okay, I'll show you later. All right, so another very important thing is pitfalls in trading warrants. Why I say that is actually very layman, but I just want to explain on some of the misconceptions while trading warrants. We would say that first, low premium warrants is really cheap. I will definitely make money if I buy low premium warrants. But do bear in mind, low premium warrants could mean something else. I would say the very, very main thing is that it's very, most of the low premium warrants are actually very close to the expiry date and the time decay is fast. So you can see, I will show you an example later that you will see low premium warrants. It's not that it's not good, but you have to be really careful. Low premium could be, it's really close to the expiry date. All right. Second would be high volume of, high traded volume in that specific warrants. All right. So high volume means that there's actually a lot of buying and selling. All right. So it definitely indicates some of the demands in that warrant, but maybe it's not the demand. Maybe it's just the existing investors who are selling it back to the issuers. All right. So another thing that you have to take note is that if this warrant is trading in with a high volume, but if you can have a reference on the price matrix, it will be great for you to look at it. So high volume, but if it's not following the issuer's bid and ask price, so it's actually out of the matrix. And another thing that you may have to notice is whether it is low on inventory or out of stock. All right, so there's another extra thing that you can actually look at the respective issuer's website to know that whether they are actually out of stock. All right, so high volume warrants doesn't mean it's not good, or maybe it's like super good. So it actually depends on how do you look at it, because some of the warrants could be highly in demand because some people like it cheap, or some people like it, with very high effective gearing. But maybe it's not for you. Maybe your risk appetite is actually lesser, so you are looking for something that is not so highly geared. Then with that, you actually have to look for another warrants that is more suitable to your risk appetite. All right. So third is the cheap warrants. Okay, pitfalls. Why we say that? Cheap warrants doesn't mean it's the best or it's the cheapest, because cheap warrants may need the share price to move more ticks, means it's less sensitive. So this is actually linked to what we have shared before, that the sensitivity of the warrant. Maybe it's out of money and it actually requires more time for the warrants to move by one bit. All right. So this is what we call pitfalls. Pitfalls means that you don't know what is it happening and then you go and buy the warrant. Yeah. So just get everything. I mean, you have to clear your doubts first before you invest into the specific warrants. All right. So this is another very good example, SP50 again. So yeah, so you can see this is actually a very cheap warrant, the bid price at 2 cents, but then the sensitivity is actually 4 ticks, means you have to move 4 ticks for it to go for 1 tick. Yeah, so it's really important for you to know. All right, so follow us. This is our RHB Warrant website. RHB Warrant Telegram. All right, you can scan over here to follow us on the upcoming US stock warrants. If you're issuing any, so you will get the first-hand news. All right. Okay, so let's go back to our main topic. What's your view on this is actually a snapshot from the age. So whether we are going to gain from Trump or maybe Harris victory. So I would say I will have actually pick a few warrant picks. Like for example, the first thing is actually the semiconductor name, Inari. Inari is always a very famous, popular when it comes to a semiconductor name. So Inari, there's actually two Inari warrants that's issued by RHB Warrant, C2H and C2S. So here I will actually just share with you how I'm going to look at it. So the first thing, I'll definitely eliminate the one that is very close to the expiry date. So C2H out. So we are going to look at Inari C2S. All right, so C2S currently is I would say it's not very sensitive, but the gearing is actually quite decent at about 6 times. But the sensitivity is about 10 ticks. So for Inari, it has to move slightly, you have to move up for a bit more for it to become less sensitive. More sensitive, so the ticks will be lesser. All right, but if you're bullish and you are holding a very bullish tone on, the semiconductor name of Inari, currently the bid price for Inari C2S is only 2.5 cents. All right, so since it has a few months more to expiry, which falls on the 28th April 2025. So Inari C2S is actually quite a good choice if you're bullish. All right, so another name that Shane actually shared and mentioned about is the rubber glove stocks. All right, so our Taiko is actually top glove. So there's actually two top glove warrants that we have issued this year, and both of them they actually have a very similar expiry date, but because of the exercise price is different. One is a bit more out of the money because you can see share price is 1.06, but the exercise price is 1.22. Another one is a bit closer, it's actually very close to the exercise price. All right, so you can actually notice the differences between the sensitivity and the effective gearing. So if you want to hold for longer term and you want it to move a bit faster, you can actually look for something like C4Q. So C4Q is giving sensitivity of 2 ticks and the gearing of about 2.7 times. All right, but the bid price is 10 cents lah. But 10 cents is actually relatively cheaper than the mother share as well. All right, so some of other technology sectors stocks such as Penta, Frontcan, and all, it will be made available on our RHB Warrant website because we have warrants that's issued over them. All right, so I'll share with you. Let me share my warrant search screen. All right, so this is actually RHB Warrant website. You can go to warrant.rhbgroup.com, or you can just Google it, and then you can search. So Frontcan is actually one of the highly sought after technology name, which if your view on the US presidential election is going to impact on some of the technology, the semiconductor names and all. Okay, Frontcan C34 is actually issued by RHB. This one. So you can actually put all issuers here to compare which is the better, more suitable warrant for yourself. And for RHB, it's actually quite competitive, I would say, because the warrant price is the warrant price is actually cheaper in absolute value, and also the expiry date is quite far from now, so it's 28 April. So if you would like to look into Frontcan C34, just click onto it, and then it will actually bring you to the warrant details, and you can actually look at the live price matrix over here. So you can gauge your entry and exit point. If you're not investing into it yet, then you can actually put this on your watch list. All right, so Frontcan, and I would say Frontcan is actually quite a good choice lah. So, but for RHB Warrant website, you have to use it during the trading hours because all this data, they're actually live from the trading. I would say it's actually a live feed, but the delay for about 15 to 30 minutes. Yeah, but you have to use it during the trading hours, so it will be more accurate, including the effective gearing and sensitivity. Okay, all right. So let me go back to my slide. All right, so yeah, I think with that I will actually conclude. Okay, these are some of the active warrants today. Landia Smart, KPJ, SP Satir. It will be available on our RHB website as well. All right, so let me just conclude here because I think it's quite short for me to share today, and we are approaching the Q&A time. So this is my hotline and also our RHB warrant telegram. So if you have any question and queries, you can contact me or contact us at this 03 number, and also you can actually email to us as well. All right, so thank you very much. We can proceed, I think.
All
Shane.
right, thanks Vanessa for teaching us how do we use structural warrants to capitalize on the election volatility. All right, so if any question to ask any of us, you may write them at the Q&A box. I've seen several questions being addressed to me, so let me just take those questions first. First question is, in one of your slide, you guided that the Fed might cut its Fed funds rate to 4.75% to 5%. Okay, the reality is they have actually cut that to in September, right? The Fed fund rates range now is 4.75% to 5%. So the question asks, what is my forecast for the rate year end and how many cuts you expect in 2025? Now, personally, I am not an economist, so I don't really go in depth into the economy data to try to think what Federal Reserve will do. But if you were to ask me if I were to give an educated guess myself, I think in the next two meetings, there are going to be a 25 basis point cut in November and December. And towards the end of 2025, that might be 100 basis point cut, maybe 25 basis point each in 4 meetings out of the 8. So in other words, out of the 8 meetings, maybe 4 meetings will result in a 25 basis point cut, leading to a 100 basis point cut next year into end of 2025. So this is just educated guess, right? So we won't know what happened. Our job as an investor is that we react as how the market changes. So if Trump wins the election, so if he imposes more tariff, then it's going to be more inflationary to America. So if America has more inflationary pressure because of all these tariff, imported goods become more expensive, then Federal Reserve may roll back on their the interest rate cut path, right? So we just play by ears. All right. So if Kamala were to win the presidential election based on the forecast and Trump is expected not to concede to his defeat, what will be the impact to both the equity and bond market? All right. Well, if what happened in January 2021 would be an indicator to this scenario happening again, whereby there's a US capital riot. Okay, so what happened in early January 2021 is that the market didn't care at all. Okay, the market will rattle a little bit on the day where the riot happened, but after that 1 week, Dow Jones also reached all-time high. Okay, about 31,000 point, right? I still remember. So the market did not care. Okay, so still went up. Okay, even though there seems to be a threat to the US democracy, so the market didn't care as well. So if this were to repeat itself again, I guess market will still march on, right? So this is just my view lah. All right. As I said, any dip in October, would be a good opportunity to accumulate, right? Because historical data has proven that November and December tends to be a better months, and then leading up to May next year, post-election, on average, the election years outperform the non-election year by almost 2 times. All right. Hope I've answered the question. Okay. So Arin asks, who do you think market is right thinking Trump will win? Okay. Well, regardless of who win, I think the market will still rally if you look at the past historical performance. All right. So I've Dan, I've addressed all questions that is targeted to me. So let me pose those questions to Vanessa, right? So Vanessa, is there any warrants that represent stocks from China or US, right? I think US you has mentioned three already, right? Which are Intel, Microsoft, and Amazon. How about China?
Um, I- for China, okay, you can actually look at the Hong Kong stock warrants. So I will share with you on this RHB website, warrant website. So it actually does not require a login. So you just go to warrant search, and then as currently RHB we do not have any existing Hong Kong names. You can actually put all issuers, and then you can change here to Hong Kong underlying. All right, so you can use the website to actually look at all issuers Hong Kong warrants as well. So I would say these are maybe these like Alibaba, A50, China. These are the names that you're looking at. Yeah, so this is actually a very good tool for you to look for it. So, and also yes, to answer your question, there are actually some Hong Kong names that's listed on Bursa Malaysia.
All right. So does RHB have simulation for paper trading on warrants?
Simulation on paper tradings on warrants, we do not have any, but since I'm on this page already, right? So you can actually use this warrant calculator to calculate the indicated return on the warrants. So there's no, I would say the trading is like a demo platform, right? Is that so, Shane?
Yep, that's right.
No, we do not have any
Mm.
any platform like that. But if you want to like calculate an indicative return, then warrant calculator can be used now. All right.
All right. So the next question by Abdul Manaf is that what is the process to exercise warrants in Malaysia?
All right. So that's actually two types of warrants. The first one is company warrant, as I shared earlier on. So the settlement, the exercise of the warrants is actually a physical delivery on the shares. But for structured warrants, which is what I shared during all this during this presentation, for structured warrants, they are actually cash settled. So you do not have to actually exercise it because it will be determined by this. Okay, let me share with you on one of the ideas that I have shared earlier on. So it will be cash settled. So first thing, what we will see is actually the moneyness of the warrant. So when it's expired, we can see whether the warrant is actually in the money, at the money, or out the money. All right. So with that, if it's in the money, we can actually use 5 days average closing price minus off the exercise price, and then we use this calculation to see whether how much cash you will get back in return. So we call it the cash settlement. But if your warrant is actually expired out the money, then unfortunately you are not able to get back any of the, you know, the cash in return. Yeah. So let me just, maybe I'll share with you later on our chat.
All right.
Hmm.
So
Yeah.
the next question is it easier to exercise the warrant or just gain advantage from the warrant price increase? What is your advice?
All right. So it will be easier. Okay, if you ask me, right, I would say if you're going to just make profit from the movement of the BNR's price of the warrant, because you can just sell it in the market or sell it back to the issuers and you'll get back your cash immediately. But if you would like to wait upon expiry and wait for cash settlement, and it's also in the money, you are definitely getting some money back, right? But you actually have to wait for 7 market days for you to get back the money back into your account. So in that case, maybe your cash flow would be a bit stuck. Yeah. So in the case of the warrant price, the share price will also move because we actually take 5 days of average closing price. So there will be a bit of uncertainty over there lah. So if you ask me, in my opinion, I would say um just take profit whenever you think it's the right time.
All right. So the next question is: so in what scenario does financial institution like RHP, decide to issue a structured warrants on the company?
All right. So how definitely because okay, so as a team, we actually monitor on the market closely. So we will actually determine which are the popular counters that the investors will actually have interest on. All right, with that, we actually have a few requirements for us to choose which counter to issue. So first thing, it has to be listed on the main market. And secondly, it has to be above 500 million of market cap. All right, and then with that and with enough of sufficient of liquidity on that mother share, and we definitely have some bullish sentiments on all these counters, then we will decide to issue warrants over all these names. Yeah.
All right. Does the US structured warrants buying and selling follow the US market time?
No, because the structured warrant we will actually market make during the Malaysian time because we only work 9 to 5, right? All right, so how we actually market make, we actually use the after hours price of all these shares. So we actually use that price as a reference price for us to market to provide the BNR's code. So for our US stock warrants, the price will actually not move during the day. It won't be moving a lot during the day. But so it will be more suitable for those who actually invest for a few days. So you can actually capture 1 or 2 days gain. But intraday, usually you don't actually see any movement. Yeah,
Yep,
because we use
US
the
market
after
is closed.
hours.
All right. So can you give examples on the pitfalls on warrants in 3 circumstances as you explained in the slide? This asked by Rin.
Okay, yes, can. No problem. I'll just do a quick one. So same thing. I'll use this toolbox. And then usually if you want to look at very cheap price, then you just sort over here long. Yeah, so some people, they will just look for very cheap warrant price. They want to buy it cheap and all. So these are actually a cheap warrants, like 0.5 cent only. So imagine 0.5 cent is not even 1 cent, right? So look at all this. So it's usually very deep out the money. So you can see the price, like Genetec CD, the exercise price we set at 2.48 ringgit, but currently the share price is only 77 cents. And then you can actually see the sensitivity is 38 ticks, so it's super not sensitive. So if you want something that's really cheap, this is a cheap warrant. But in this case, looking at all these parameters like the sensitivity and also effective gearing, then I would say it's not a very good choice for you to invest. Yeah. So Inari C2H, like just now I have shown 2 examples on Inari. Inari C2H is one of it, and then it's actually very cheap as well. But look at it, the spread is really huge, and then it's very close to expiry date. So these are actually some of the very cheap warrants that you should not touch. Yeah. So these are some of the examples.
Right. Thanks, Vanessa. So it looks like that's all the time we have for this session. So we have one last question coming in from Jack Lim. Just posted on the Q&A, right? Is the warrant metric price fixed for the whole duration of the warrant period, or is it being revised from time to time? So let's take this as one last question. You're on mute, Vanessa.
Okay, sorry. So yeah, for the price matrix, for RHB, we are providing the price matrix live. So which means it will change from time to time. Because how do we actually look at the price matrix? The price matrix will change, like as I mentioned, sensitivity and effective gearing, they are not fixed because it will be influenced by the changes in the share price and also time and all other factors. So for example, if you look at Top Glove here, this is the matrix that you will look at it. I mean, maybe earlier this afternoon. All right, but tomorrow maybe Top Glove price drop or maybe it went up. So in that case, there's so many factors that affect the parameters of Top Glove change. All right, and with that, the Top Glove live matrix will actually change as well. So it's very important for you to use the issuer's website that provides a live matrix so that you can actually follow the movement of the shares.
All right.
Yes.
So I think that's all the time we have for Q&A. Thank you so much to Vanessa for coming to this webinar as a guest speaker from RHB to teach us how to use structured warrants to capture the volatility spike, right, during the election period. Right. So thank you everybody for joining this webinar. Hope to see you guys in our next webinar. Bye-bye and have a great day ahead.
Thank you, Shane. Thanks everyone for dialing in. Thank you.
All right. Thanks.